Hey everyone, welcome to a new video. Today we're going to be talking about the Viper Algo. I have an absolutely fantastic strategy that you need to hear right now. It has an incredible hit rate and you won't even believe how much profit you can make in just one day trading this strategy. I'm going to go ahead and show you each and every step that you need to follow to make money with this on Bitcoin. And the best part is you can even automate the strategy. Alright, but that's going to be for another video. So let's get right into it, everyone. So take a look at this. This is my trading view at the moment. As you can see, this is the Viper Algo. Let me go ahead and show you my settings very quickly. I have it set on scalping and I have everything else turned off. There are so many settings that you can use right now with the Viper Algo. It's absolutely fantastic. But for now, for our strategy, we're going to go ahead and turn off all of the noise. And as you can see, with these settings, the most basic settings, this algo can give you some incredible results. So with that being said, let's go ahead and get right into it. So the first step is going to be that you need to set yourself in on Heikin and Ashi candles with the algo. So as you can see, I have the algo right here on this TradingView tab, and I have ourselves set right here on Heikin and Ashi. You can tell that you're on Heikin and Ashi because the candles look like this. These are regular candles, these are Heikin and Ashi. They look a little bit different, as you can see. So whenever you're on Heikin and Ashi, the reason why we use it is because it is going to give you much better signals for an algorithm. So algorithms like the Viper Algo is all based off momentum, right? And so as you can see, in a choppy area like this, the algo is going to give you many signals because it's confused as to where things are going to be going. With a bit of green, it's going to tell you to buy. A little bit of red, it's going to tell you to sell. And so how can you mitigate this, right? Even with Heikin and Ashi, it's going to give you signals like this where it's a bit choppy. How can you get good signals out of the algo? Because if you were to be trading each and every signal, you'd be up all day and all night. There's no way you'd be able to make money with this, right? Well, that's the thing. This is when you are able to apply the principle of time and price. And this is very easy to apply. I'm going to go ahead and show you this indicator right here called the ICT kill zones and pivots. To go ahead and get the same look as I have right here, you're just going to want to head and copy these settings. So personally, I set my time frame limit to 1 hour. I always set my time in EST. It's very important to have it set in EST. As you can see, the market opens from 9:30 a.m. to 4 p.m. But obviously, we are not trading New York. We're not trading equities or S&P, anything like that, right? We are trading crypto. So why should this matter? Because that's when the most volume is in the markets. And that's when the algorithm that runs the markets is going to activate and you're going to see multiple opportunities. So let's go ahead and take a look at this. Right over here, I'm going to go ahead and set my kill zone boxes like so. So over here it says London, and this is technically New York. I just haven't changed it, so I'll just type in New York, 9:30 to 4. My silver bullet, you don't need these. You can just go ahead and remove these two right here. And all you need is going to be New York lunch, which is this red box right here, and of course the basic New York blue box, right? And so I decided to do blue and red in this case because lunch is usually an area that you don't want to be trading. But there is a little bit of alpha that I'm going to show you guys in a way you can use the algo this way. So this is the open, right over here. These are the rest of my settings, nothing really major going on here. So the way that we're going to be trading with the algo, right, because there's so many signals during the day, if you want to be trading it automatically, there is going to be a way that you can do this, but that will be for another video. Okay, for now, I just want to go ahead and show you how you can trade it yourself very easily on any exchange. You don't even need KYC. You don't even need to have a VPN. All you need to do is just deposit some funds and you're ready to go. You can go ahead and use it on demo trading as well if you want. You don't even need any money at all. All you need is just to do it on TradingView or do it on any exchange, right? And you're going to be able to do some demo trading. So with that being said, right, take a look at this. The first signal over here that occurred during this New York session, which was on the 17th of August, so this was last Thursday, as you can see, this gave us a sell signal right before this massive move down, right? And so how would you play this, right? The way that you would play this is by looking to enter as soon as the algo tells you to. How do you do this, right? How would I know like when the algo signals? The way to make sure that you get the right signals is just to go over here onto the Viper Algo, go to the 3 small dots where it says more, click add alert, and since I have the premium membership for TradingView, it allows me to just keep it on forever. But for you with expiration, all you need to do is just set it over into, let's say, a week from now, a month from now. Just make sure that you still have it active so that it doesn't deactivate by its own. In this case, you'd go ahead and set it once per bar close. So this means you're going to go ahead and get an alert as soon as the bar closes. And this is very, very important for you guys to understand. You cannot be trading an algo signal as the bar is still moving. So let's say it's a 5-minute candlestick, right? 5 minutes. That means it takes 5 minutes for it to open and then for it to close. And so you don't want to be trading in between that fluctuation, as prices can move up very quickly. The algo is telling you to buy, and then it pulls back down and closes lower, and then next thing you know, the algo signal is gone. So very, very important to keep that in mind. over here where it says once per bar close, you need to make sure you select that. And then from there, intraday buy, intraday sell, scalp buy, scalp sell, etc. Right? You're going to have all of these available options. We are using the scalping option, so you'd be doing the scalp buy or scalp sell, right? So you just set your alerts there, and then as soon as you get the alert, you go ahead and get in on the trade. But how do you actually take these trades, right? Like, what's your stop loss? What's your take profit? How's this going to work, right? Very, very simple. So the reason why we have these two charts is because if I were to go ahead and just zoom in right here and show you where we have the entry, right? So if I just zoom in right here, this is when we have the entry. As you can see to the right side, you can see that this is on this candle right here at 9:32 a.m., 2 minutes right after the open of the New York session. If I were to go ahead and just set up a short position right here based off of the actual close of the Heikin-Ashi candle, as you can see, this is actually going to be a little bit higher than your real entry, because we don't trade on Heikin-Ashi candles, we trade on regular candlesticks. So this is why we have these two, so that you make sure you have the right entries. Now, if you automate this with a bot, you don't have to worry about this. And this is something, once again, I'll talk about later. Something absolutely insane that you will be able to do very, very soon. All right, now look at this. This would be your entry. From there, you just need to set your stop loss. And I have seen with my back testing that a 0.1% stop loss is more than enough in most cases. Sometimes when there's a lot of volatility, you're going to need to kind of move around your stop loss, have something a bit bigger. But for our strategy, we're going to go and keep it stupid simple with a 0.1% stop loss, and so that we can get the best risk to reward. Okay, let's go ahead and slide this down until it says 0.1%. So this is your entry right here. All right, so this is the next candlestick. Notice how it didn't even go against you. Guys, it just went straight in your direction. We didn't even come anywhere near our stop loss, and then we just started to move down. Now, instantly, you already got 6 risks to reward occurring within just an hour. Now, what does this mean? What is 6 risks to reward? So 1 risk to reward would be whatever you were looking to risk. If you were looking to risk, let's just say $10, right? You want to take a trade, and your stop loss, if it triggers, for example, if Bitcoin were to go to 28,509, which would be us going from our entry right here up into our stop loss, and that would be us hitting stop loss, right? So if we were to see that happen, you would right here lose $10, right? And so what does this mean? All right, if you have a 1-to-1 risk to reward, that means, let me go ahead and just show you, right? Like this would be 1-to-1. This means you'd be looking to make what you are risking. So you're looking to risk 0.1%. And you'd be looking to make 0.1%. So naturally, if you're looking to risk $10, you're going to be looking to make $10. Now, what if you were to increase that? Let's say you have a 2-to-1, right? Let's go ahead and slide this until it says 2-to-1. Now, notice how our take profit now says 0.2%. So very clearly, that means it's double whatever you're looking to risk. So if you're looking to risk $10, now you're looking to make $20. So with this algo, you're able to get some incredible signals and that occur very, very fast right here on a 2-minute on Bitcoin with these very basic settings, and boom, 6 risks to reward. But remember, this is not the whole move, right? Look how big this move ended up being. Now, I'm not going to go ahead and pretend like you're going to be able to catch these moves every single day all the time, because even just catching one of these a month can make you a lot of money. Let me go ahead and just slide this down and show you how powerful this is. Now, before I do that, let me go ahead and just answer this question before you even have it, because you're going to see a crazy number and then you're going to be thinking, okay, great, Seb, so how can I actually catch this, right? And that's the power of a trailing stop loss. Once again, something we're gonna have to explain in the video. For now, I'm just giving you guys the strategy, and you can go ahead and modify it as you need and get the extra details in coming videos, all right? Now, I'm gonna go ahead and slide this down to the low that we had right here. Let me go ahead and show you during our lunch session. Now, I know whenever you look at this, you may be thinking, Seb, this is insane. Your stop loss is 0.1%. You got in right here, and then this thing just dumped and gave you 28 risk to reward. So just think about this. Let's say you have $10 you want to risk. All right, you want to go ahead and test out the algo, put in $10. You put $10 on your stop loss, which means in this dark blue area up here, you'd be looking to risk $10. Your stop loss hits, you lose $10, right? Quite simple. But what if you hit your take profit in this case? That's 28 times what you're looking to risk, guys. You risk $10, you make $280. Now, if you're a bit more advanced and you want to use a bit more capital, right, you could make a month's wage risking $100, right? In most countries, that'd be a month's wage. All right, for anyone working part-time, that's a month's wage. That's $2,800. One trade, right? Now you might be wondering, okay, well, how often does this happen? What's the win rate? this is the point. You need to consider the risk to reward, and you need to consider the right time. Because if you were to take every signal the algo gives you right here, you take a trade right here, and then right here, here, and then you would just get chopped up, right? Maybe you'd end up profitable in the end because you can catch big moves, but you would get mentally chopped out as well, right? You would just get too many signals, and even if you hadn't bought automatically running, I think it would take a toll on you. So why would you do that when you could just take the right time, right? Take the trades at the right times. Now let me go ahead and show you the second general entry, which is going to be solid. Right here, entering at lunchtime is usually going to give you a very good trade. Not every day. I'm going to go ahead and show you a day where it did not work. But generally speaking, right, it is going to give you an absolutely fantastic opportunity. So right here, as you can see, this is when the algo signaled. This is when the bar closed. But like I said, you need to be looking at the actual bar on regular candles. So this would be the open right here where you get in. 0.1% would be like so. All right. So let's go and zoom in. This is your entry, correct? This is your stop loss, 0.1%. And this thing moved up about 1.3 risk to reward before it ended up going and hitting your stop loss. Okay. So if you were to have taken this trade in the morning, right, which goes back to this right here, this sell signal giving you 28 risk to reward. Even if you had just caught this move for 6, right, that means you would have made $60 based off a $10 stop loss. In this case, you would have just lost $10. You're still up $50 on the day. All right. And that's just you catching a small part of the move. Then the next one is going to be the last trade, the last signal right before the close or right after the close of New York. All right, so there's going to be a time difference of maybe 5 to 10 minutes, generally speaking. All right, as you can see right here, this last signal was created at 3:44. In other words, about 15 minutes before. So roughly that kind of time difference is going to be what you're looking for. All right, the last signal of the day, and then from there, once again, you'll be taking your short like so. Actually add it into the right number, boom. Stop loss of 0.1%, remember, so in this case 0.1% would be right here. And as you can see, sometimes when the volatility is high, it will go for your stop loss, but like I said, right, in this case it would not, because this is where you got in. Remember, this is the candle, this is the actual close of it, so this is when you would be able to get in. Now if you're doing it manually, the odds of you actually getting in right away, right, are low. In this case, this is actually beneficial for you because we ended up moving up right after. This is a 2-minute candle, which means each one of these is 2 minutes. So in this case, you probably got an even better entry. All right. And this thing did not hit your stop loss, for example, if you took it right away or you took it with a bot. As you can see, 0.1%, it did not hit. This was your actual entry. Now, once again, you need to use a trailing stop loss to catch this big move because for the most part, the algo is going to give you multiple risk to rewards, right? 2, 3, 4, 5, 10, etc. But this kind of thing is extraordinary. All right, and this happens every now and then in crypto. This was the big flash crash that we saw because of Evergrande, right, defaulting on their debt. This was last Thursday. We saw Bitcoin go from 28,000 all the way down a little bit lower than 25K on certain perpetual exchanges. Now, what's the risk to reward on this? 120. You were looking to risk 0.1% to make 12%. Imagine that. You put in $10 of risk, you just made a month's wage, $1,200. You put in $100 of risk, $12,000, one trade. Now, are you catching, the absolute entirety of this move? No, but you are getting an optimal entry, a very, very tight stop loss based off of back testing showing that it does work. And this is a very good stop loss. And then from there, you're able to catch a very grand majority of the moves. All right. If you were to take a realistic kind of take profit, right here, this was the move giving you 14 risk to reward. Any trader that I know would be more than happy to take that a couple of times a week. All right. So let's do the math. What if you were to take these trades, right? Let's just say 3 days a week and get on average 5 risk to reward. That would be 15 risk to reward. Okay. 15 risk to reward or 60 risk to reward a month. If you put in $1,000, right, into your trading account, you'd be making $600 a month. That is a 60% gain on your account each and every month based off of very, very, very small gains. All right. And then if you were to go into the next couple of sessions, you would be able to see that there is constant opportunity. Sometimes we chop in the morning right before New York, and so you won't be able to get necessarily the trade you're looking for. For example, maybe you took this first trade and then from there it stopped out and then you just waited for the next opportunity. And like I said, you'd be looking for lunch. So what happened right here? Let's go ahead and, whoops, ended up zooming out a little bit too much. Let's go back to Friday right here. And let me go ahead and zoom in right here. All right. So as you can see right here, this is going to be your entry candle, right? This is your candle. This is where it closed. That's your entry. 0.1% stop loss. You can see we did not even come near. We just pumped right away. Now, had you caught this move up right here, that's 12 risk to reward. And that right here was after lunch. So like I've said, sometimes you get a really great entry right at the start of New York session at 9:30 a.m., right around that time, between 9 and let's say 9:45. And then sometimes you get a really, really good trade right after the lunch session ends, because lunch session usually we chop, and then from there we see a big move. Now over here, right, you'll usually get a pretty good signal right here at the end of the day as well, but not always. In this case, right, this was your entry signal, and this thing moved down and would have hit your stop loss. So even if you are only getting one good trade out of 3, you are still going to be making dozens of times whatever you're looking to risk consistently. Now, the main thing you need to know is I want you to be trading this Monday to Friday. I don't want you to be trading this on weekends because there's a lot less volatility on weekends. I want you to be using the 2-minute chart with these settings on the algo. All right, right here. These are the settings. And I want you to be considering the right times, right? So you don't even need to use this indicator right here. It's totally free if you want to, of course. But if you don't want to use it and you want to use, for example, just a basic drawing, which you could do by going over here and then clicking on vertical line right here. You can go ahead and just set this to 9:30 a.m. each and every day, and then from there right after lunch would be right here, and then right at the end of New York. That's how you would do it, and then you would know right here that this is when you're starting to look for entries, and then you would just let it run. Now, if you don't have a very set take profit, right, your stop loss is always 0.1%. Your set take profit would be, let's say, 0.3, 0.5%. In other words, 5 versus reward. So once again, if you're risking $10 in your stop loss, you'd be looking to make $30, $50 in your take profit. You can just up how much money you're going in with, right? I'm going with very low numbers, but you could be looking to risk 1,000. Then you could be making 2,000, 3,000, 5,000, 10,000 plus per trade. So I hope you guys enjoyed this video. I'm going to go ahead and continue making more of these. The next one is going to be all about using this strategy with a bot. All right. And so I'm going to go ahead and show you how you can actually automate this and take these trades completely automatically. All right, nothing is perfect, but this right here is pretty close to perfection. So hope all of you enjoyed the video. Remember, my socials are down below, so go ahead and check out my link tree to get more information from me. I'll be seeing all of you very soon. Bye.